Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. Welcome to the COB. Nice to be here with you. I'm Nadine Blaney. It is Monday, the 10th of March, and we are just past 4 p.m. here in Sydney. So you know what that means. It means that the CBOE Australia Index has come to a close, up by 0.2%. We still have the S&P ASX 200, or the last of the day's trades going through there. It is below 8,000. Still nice to see some green on the screen. It too is up by 0.2%. Just looking at E-minis in the States though, and NASDAQ and S&P 500 E-minis coming under pressure as we make our way toward the open of the US session. So what helped drive markets here? Well, look no further than the energy plays. It's one of our key themes of the day. The miners as well coming to the party. And interesting to note that we are watching iron ore, again, holding up pretty well, thank you very much, climbing on the prospect of further Chinese stimulus in the wake of stimulus that we saw coming through that tiger economy last week. Because we saw that really lackluster inflation read coming through, and so it now looks as if we might be getting further stimulus coming from China. And then I guess the last theme, there wasn't a lot of corporate news out. However, it looks as if there might be some sort of a rescue plan coming in place for Star Entertainment. Let's check those, some of the sectors that help drive the market. Energy looking really strong. Woodside up by 0.2%. What I thought was interesting about energy today is we did see oil prices declining as investors continue to really worry about tariffs and what that new regime will mean going forward. Another sector that outperformed, the REITs as a whole. Charter Hall, you can see, is the exception to the rule there, but overall did really well today. And you can see Dexus there. Dexus has come up in a few conversations as of late in terms of a company position to recoup some losses as we see office coming back to life. And just a thought, we've got 7 out of the 11 sectors higher today. One sector that's dragging, healthcare. So you can see CSL there down by pretty close to 2%. And that does damage to the overall market because of the significant weighting of CSL. In the call today, I did have Mathan Somasundaram from Deep Data Analytics with me, and he gave us his pick in the healthcare space, which was Sonic. If you'd like to go back and listen to that episode of the call, it is up online, or you can listen to it in podcast form as well, if that's your thing. BHP in the news today, set to spend up to $40 million to explore for Tier 1 copper-silver deposits in Botswana by taking a 75% stake in this little explorer called Cobra. Now, we've also got gold miner St. Barbara expecting a better second half of 2025 after a relatively poor first half. So you can see there, shares coming under quite a lot of pressure today. We also had a number of companies trading ex-dividend. Super Retail is one that stands out as down significantly, but trading without its dividend. We were watching the insurers today, of course, after Cyclone Alfred got downgraded to a tropical low on Saturday. Look at some good gains being seen there for Suncorp in particular, up by 3%. It too got a mention on the call today. We saw coal miners surging after China logged record coal imports. Look at Whitehaven and Coronado. Mineral Resources on the list after L1 Capital increased its stake in Mineral Resources to 9.19%. That was in a filing on Friday. I mentioned St. Barbara Mayer Resources saw a big jump. Jerry Harvey picked up a major stake in the company through his investment vehicle, Velroso. So he's now got a 6.7% stake in Mayer Resources. Eclipse surged on an earn-in deal with Boss Energy, though Boss was off by 3.5%. Argosy Minerals gained on a lithium carbonate sale contract. And Polynovo, I guess, made up some ground that it lost on Friday after media reports suggest Chair David Williams was the subject of an independent probe into the alleged bullying, of company executives. And then you've got Morgan Stanley. We had a number of broker moves today, but Morgan Stanley picked Qantas and Orica as its top Australian industrials. My goodness, Qantas was one of the stocks covered on the call today, as was Orica. It was a stock of the day, and I spoke with Nathan and Sean Hickman from Market Matters.
The outlook is pretty positive. The buyback makes sense. I don't think it's cheap. I don't think it's expensive. It's, compared to the market, it's cheap because the market's expensive. But look, I think this is a good player. I mean, if you're there, I think hold on. I think it looks pretty good. The result recently was pretty solid. The market was a bit worried. I think that's subsided now. So I think you're okay. I'm not seeing massive returns yet, especially when you've got US worries weighing on global growth. That kind of plays into it, and China uncertainty.
I think it was summed up perfectly. It's a solid hold.
Yeah.
We haven't got it on our hit list. It's not a stock we're looking to accumulate into weakness. We feel there are better ways to play the turnaround cyclical story, which is undoubtedly proportional to. If you get a pickup in China, which we personally believe is starting to unfold, BHP was up this morning, the market struggles, you're seeing some of the miners start to find their feet, but hey, they've fallen a long way.
All right, so let's get some analysis on what's happening out there in general. And for that, Josh Gilbert from eToro joins the COB. Hey, Josh, welcome. Boy, a bit of relief as we saw the market moving in positive territory throughout the session today, but not enough to bring us above that 8,000 level, that psychological level that we breached last week.
Yeah, great to be here, Nadine. Thanks for having me. Yeah, exactly. I think, look, really we're getting that sort of bit of a boost off that rally off Wall Street on Friday. Bit of positivity through that sort of energy sector today, sort of oil prices picking up from their lows. But I still think there is this sort of overarching sense of uncertainty that is going to sort of rip through markets. It was a proper roller coaster last week for US markets, which obviously eventually, saw both the S&P 500 and Nasdaq down sort of pretty heavily anyway. Obviously, I think still weighing on the local market a little bit today was obviously that sort of deflation number coming from China over the weekend again. I think maybe from a negative perspective there, rather than maybe taking the positive of a potential stimulus package, definitely sort of coming through ultimately, or looking more and more likely to be coming through. But I think, the overarching sort of sentiment right now is just sort of risk off. And I think that's sort of just going to continue to play through in markets over the next sort of week or so. Yeah.
Okay. So what are we looking at in terms of big risk events this week, Josh?
Yeah, look, there's a few things. I think the tariff, side of the market just continues to sort of dominate it. I think Trump will just sort of continue to be front and center. There's no doubt about that. So that will be sort of back and forth, whether we get sort of maybe trade truces, maybe we get sort of maybe some rollbacks anywhere. So I think that will probably be the dominant move in markets. Probably the biggest risk event is probably going to be US CPI. That's the one we're sort of probably looking to in terms of being the market mover. Obviously, with the tariffs, the sort of the view is that we may potentially, see US inflation pick up again. We may see it sort of heat up once again. The jobs number that came through on Friday was obviously enough to sort of, lift markets, and obviously, Jerome's Powell commentary as well was a little bit more positive as well, which as I say, helped sort of really push markets a bit higher. So I think that US inflation number is going to be very important, especially after last month came in a little bit hotter than expected. We are expected to see headline and core both tick down. I think if that comes through at both those levels, that will be sort of a bit of a positive for markets that have had not a lot of positives to go off recently. And that may cool a few sort of macro concerns. But I think ultimately, we're still going to have that sort of, fear that, inflation will pick up if these tariffs continue to sort of really be pushed through. Lots of sort of economists, tipping that it will drive inflation higher. And, Goldman Sachs even saying last week that, tariffs are going to sort of really cut down S&P 500 earnings. So, I think ultimately we want to get a good number there this week to go alongside that US jobs report to sort of give us that view that, like Jerome Powell said, it's not as bad as it seems.
Yeah, I think he said it's good. The economy's good. So I wonder what that means for interest rate cuts going forward if things continue as they are. So why are we seeing pressure still coming through on crypto? Because you would imagine that, if the sentiment's improving, elsewhere, it should be doing so in crypto as well.
Yeah, so we had a pretty lackluster crypto summit over the weekend. We sort of this sort of crypto summit in the White House was sort of brandished to be this sort of great spectacle, but it only lasted around about sort of 20 to 30 minutes, which I think disappointed a lot of people. We're also sort of seeing the rollout of this sort of Bitcoin reserve, which Trump again announced sort of last week. But that was a bit of a disappointment. Yes, we sort of saw those images of him sat in the White House signing that sort of executive order. But actually, it wasn't sort of going to be coming from new government purchases. It was actually coming from Bitcoin that is basically already owned, or the US already have under their management. So that was a bit of a disappointment. It sort of maybe took away that view of a backing by the US government. We're not seeing them actively going out and sort of accumulating. And then that sort of with that tied in with the sort of those broader sort of macro concerns as well, a little bit weaker. But yeah, I think that weakness really came over the weekend. We did have that initial rally alongside equities when we had that better than expected jobs report on Friday. But I think, look, really with crypto, we're moving in the right direction. There's absolutely no doubt about that. The regulations that we're going to see sort of probably improve over the next sort of 6 to 12 months. Trump obviously being in the White House is clearly a positive for that. But I think there's been a lot of expectation sort of baked into the price of crypto within, the last year ultimately. And especially now, as you said then a moment ago, Nadine, in terms of, seeing rate cuts being pushed back, right? We're at the point here where we may not get a rate cut again this year from the Fed, right? It is, that is sort of a bit crazy to say, but it is absolutely a possibility right now. So I think that is holding risk back a little bit, and obviously, as we know, crypto is sort of the top risk asset that we really do have. So those macro concerns and the sort of the pushback of rate cuts, I think, is really holding it back, and a little bit of disappointment when there is a lot of expectation on crypto will sort of certainly put it under pressure.
All right. Well, look, it's always a pleasure to have you join us on a Monday, Josh. Have a good week.
Thanks very much, Nadine. You too.
Take care. Joining us from eToro. All right, so let's get across some of the leaders and the laggards on this market today. Volt Minerals, that's an interesting one to have up there. Beach Energy, Polynovo, Tabcorp, and Rio Tinto. A bit of news coming out of Rio Tinto just in the past few minutes or so. Palliser Capital is urging Rio to review the unification of its dual listed structure. So really urging the Rio Tinto board to press ahead with independent and transparent review of unification. It says that it's disappointed Rio's board has rejected its request for a best-in-class review. And it comes after it sent Rio's board an independent appraisal report on the unification of that dual listed structure. So laggards today, look no further than Johns Lyng. It's been taken out of the 200. Life 360 has been put in. Liontown Resources down. Insignia Financial does have another offer on the table, or improved two offers. Super Retail, I mentioned trading ex-dividend. Boss Energy down by 3.5%. In the mid to small cap space, Lavato Resources, Omega Oil and Gas, Gorilla Gold Mines, that's one, I just like that name for some reason, up by about 10%, and American Rare Earths up by 9%. The flip side to that equation, though, being Theta Gold Mines, St. Barbara, we already mentioned why. Noble Oak Life Insurer, down by 6.3%. It's quite possible Noble Oak is trading ex-dividend today. I do remember we spoke with the CEO when it reported. And Noble Oak, I'm just checking in. I hate not knowing. Can't get it up right now. I'll figure it out. Brazilian Rare Earth down by 6% as well. Tonight, so it's not a huge night in terms of data, but we do get industrial production for January. It's expected to rise 1.5%. We also get the Centex investor confidence, and that is expected to improve as well. We have, a lot of companies in Europe performing pretty well right now. Tomorrow, here locally, we will continue to have some of those companies trading ex-dividend. We also get the February NAB Business Survey, GDP for the fourth quarter from Japan, and then in the States tomorrow, so we'll get the JOLTS and we'll get the NFIB for February. Now here is a look at where the market sits as we say goodbye. Positive session with, that's the CBO Australia Index, but we did have the S&P ASX 200 Index also gaining about 0.2%. and it's come to rest at 7,962. Keeping an eye though on E-minis, both coming under pressure, NASDAQ and S&P 500. Also, watching a little bit of a comeback happen in Japan, the Nikkei there closing up by about 0.25%. Chinese mainland markets under pressure, and the Hang Seng is down by a pretty punchy 2%. So in Canada, they have elected, or the Liberal Party has installed Mark Carney, former Bank of Canada and Bank of England governor, as its new prime minister to take over from Justin Trudeau, who is, of course, is stepping down. What else can I tell you as we get ready for the European session? Keeping an eye on oil, picking itself up off the mat. And again, we've got, deflationary concerns in China, spurring hopes for further stimulus there. All right, that's it for today. We're back live, 9:45 tomorrow. Hope to see you then.